Hello from me with the weekly blockchain brief. If you want to know which was the first major bank to perform a DeFi transaction, why Binance is selling FTX tokens, and how Evmos raised $27 million from their latest round, you should definitely tune in. We start the news this week with definitely huge announcement for DeFi. JPMorgan executed their first DeFi trade on a public blockchain. JPMorgan's transaction is the first time that a major bank had tokenized deposits on a public blockchain. That's why it's so big. The transaction was part of the pilot project of the Monetary Authority of Singapore, which is called Guardian, and the program aims to explore potential DeFi applications in the wholesale funding markets. A live cross-currency transaction was conducted involving tokenized Singaporean dollar and Japanese yen deposits. Also, another transaction was performed exercising buying and selling of tokenized government bonds. The trade was executed on Polygon using a modified version of the Aave protocol. Overall, we can say that this is a huge milestone for the industry, and it represents a massive step towards bridging traditional financial assets into DeFi. And the second news is again Polygon related and their native token MATIC, which rallied last week. So we can say that there are more positive fundamental developments for Polygon after the JPMorgan transaction. We observed the rally last week of their native token MATIC, which I believe is well deserved. First, Polygon established themselves as a leader in the Web3 gaming industry through their grants, investment arm, also the support for the ecosystem. However, this is not related to gaming. The rally, we believe, is related to the partnership announcement with Meta, through which Instagram users will be able to mint and sell Polygon-powered NFTs and digital collectibles. In terms of price action, the open interest in futures tied to MATIC has nearly doubled from $209 million to $415, and this all happened within 24 hours, which is signaling that the traders are building up their positions. And another major news regarding the FTX token FTT. That comes right after the Alameda's balance sheet was leaked online. The Binance CEO CZ responded to the leaked balance sheet with a tweet that they will be looking to sell the FTT tokens that they received as part of their exit from the FTX equity deal. CZ's announcement comes right after rumors and concerns about the financial health of Alameda Research after that leaked balance sheet. And the balance sheet revealed that the trading firm owed almost $6 billion of FTT tokens as of June 30th. The total value of assets on the balance sheet was $14.6 billion against $8 billion in liabilities. On Saturday, Alameda's research CEO Caroline Ellison responded to the rumors by tweeting that Alameda had over $10 billion of assets that were not reflected on that balance sheet. She also said that there were undisclosed hedges in place and that they already returned most of that outstanding loans. If traders believed or not, we can judge from the price action of FTT's token, which dropped exactly to $22, which was the promised amount by Alameda for buying back the tokens from Binance. And we're moving to macro. As usual, in the macro section, we'll be going over the latest data from the US. As key highlight of last week, I can say that we had the release of the jobs data, as well as Fed hiking schedule updates coming directly from the press conference after the Fed's meeting. The US economy added 261,000 jobs last month, which is well above the 200,000 estimate by economists. By the way, the data for September was also revised to 315,000 added jobs instead of the previously reported 263,000. However, the unemployment rate went up to 3.7% from 3.5%. On the other hand, the US Central Bank on Wednesday raised the rates by 75 basis points for 4 consecutive meetings, and it signaled that it hopes to shift to smaller hikes in the borrowing cost as soon as its next meeting, to allow the economy to absorb the swiftest tightening of the monetary policy in the last 40 years. However, Fed Chair Jerome Powell tempered a warning in a message after the conference that while the rate increases will be probably smaller, they will persist longer and ultimately will reach a higher level than what the policymakers previously anticipated. And also he said that, I quote, "It's very premature to consider a pause in the hiking." Current Fed rates are standing at 3.75 to 4%, and previously they were expected to reach 4.5% until end of the year. In summary, Feds do not plan to stop the hikes anytime soon, and they will probably go higher than the expectations, which is not a great news for the traditional asset classes. And why I'm saying for the traditional asset classes, because what do you think will happen with crypto? I have a very supporting data that this might not affect as much crypto. So let's see how crypto compares to the other asset classes. Until now, BTC was highly correlated with the S&P 500 index, but we believe that's not the case anymore based on the latest data. So let's look at the major asset classes in terms of performance from June 30th this year until today. The S&P lost around 0.7%, a bit less than 1. The gold is down 8%, and the US Treasuries are down almost 19%, while the Bloomberg's Galaxy Crypto Index is up 7%. That's a very interesting trend, and we're going to continue reporting it to see if that divergence persists, and if that actually continues, we might finally find the inflation hedge in crypto as we long hoped for. And we continue with the summary of the important VC deals of the week. First is Wallet Connect that raised $12.5 million in an ecosystem round. Wallet Connect has been advancing very fast since the last round. They used the previous proceeds to expand the product suite and scale it across different chains. In addition, they refreshed the wallet connection interface, added Solana support, and finalized a few more APIs. Now they are developing chain-agnostic push-up notifications and wallet-to-wallet messaging. The second deal comes from Tarsis Labs, the core developer of Evmos, which is a blockchain that allows for cross-chain transactions between Ethereum and Cosmos. They raised $27 million in a token sale led by Polychain Capital. The capital infusion is a sign of confidence after a pretty bumpy mainnet launch in May. The funding will go towards hiring more engineers, developing partnerships, and building out the Evmos ecosystem. Other participants in the round included Galaxy Digital, Hobby, Hashkey, Coinbase Ventures, Circle Ventures, and a number of Web3-linked angel investors. A bit more about Evmos if you haven't heard of them. They started as an open-source Ethermint library for tools for making Cosmos blockchain that's fully EVM compatible. It's an environment that's popular with developers on Layer 1 blockchains because of the easy transition from Ethereum. But would that funding round reflect on the price section of Evmos? You can conclude by yourself from the price chart. See that there is no clear trend, but it has been more fluctuating in a range. So see what will happen and how much the ecosystem will grow with the new funding. Thank you so much for listening. We so much appreciate your support every week. I really do hope that you like the content because we put a lot of effort to put the video together despite it's so short. So we really want to give back for your support. Stay tuned for the next video where we're going to announce a competition how to win 100 CHSB. Thank you again and have a nice week ahead.